Good morning, everyone, and welcome to the European crossover webinar. And we did go in to see the Chinese essentially just walk away from this whole situation, and looks like that's going to be elongated. Although I believe that they invited the Litzinger, I believe it was Litzinger, to and somebody else to come to China. But like I said, that's just delays. That's all it is. As we've been saying for a long time, and the boy that cried wolf, there was not going to be a deal, and now it's just a matter of how long this all plays out. From tweet I saw from David Schwal, just here some studies show that basically the whole deal with the tariffs is really going to fall on American business and households, and that even those that don't, not products coming in directly from China are going to raise the prices because they can raise the prices because the ones from China are going to be pushed up with the tariffs. So, essentially, it's just a very difficult situation. I would expect us to go on and see a pretty good pullback. We've already seen that basically the S&Ps give up everything. I mean, not give up everything, but I mean, give up. Looks like they're probably, I'm looking at it, giving an eyeball shot, probably close to 61%. Well, maybe not quite, but well over 50% of from the lows we were at to the highs we ran up on Friday. And would expect the dollar going and probably continue to pare back a bit in here. So euro's not particularly strong here. Now, obviously, the Aussie dollar is under some pressure, but still it hasn't broken to new lows, which I'm a bit surprised here. Dollar yen did open lower. I mean, we gapped a little bit lower, but we haven't made any dramatic falls yet. Although I think maybe once we get into the U.S. session, we'll probably see a little bit bigger pairbacks at that point. And the euro, I see, though, is that has continued to move a little bit higher, but once again, still quiet. I mean, it's at its highs, but relatively quiet. Obviously, here we mentioned about the S&P still working a little bit lower here. And we mentioned here's the Aussie yen. Same thing. We haven't broken to new lows yet, but we're certainly making those strides in that direction. So let's go on and just move on to the to the news, and then from there we'll get into the analysis. So the morning bid as EU votes near White House welcomes Orban. President Trump will receive Hungarian Prime Minister Viktor Orban at the White House later today, brushing aside warnings from leading Republicans and Democrats over his record on the rule of law and moves to nurture ties with Vladimir Putin's Russia. The White House insists this is part of Trump's policy of re-engaging with leaders in Central and Eastern Europe, arguing they may have been neglected by past U.S. administrations that cannot have escaped that Trump's notice that the invitation comes right in the middle of the European Parliament election, leading to accusations that Trump is favoring the populist side in his attempt to undermine mainstream candidates. Okay, and the truly awful showing of UK conservatives and voter surveys that show them coming fifth or even sixth to the EU elections, leading to yet more calls for Theresa May to quit as party leader. The latest YouGov poll released this morning shows Nigel Farage's Brexit party of 34%, compared with just 10% for the Conservatives, prompting senior party figures to demand she set out for her departure plans this week. The flip side of the polling is that Labour, with many Remainers, put up by its heavily caveated policy on our second referendum, is also shedding votes, while unequivocally pro-EU parties are gaining. As things stand, the election is starting to look like something of a proxy for a second referendum itself, with big questions remaining about which set of voters actually bothered to turn out. Freshly from winning a confidence vote on Friday, Greek Prime Minister Alexis Tsipras will see his package of relief measures debated in Parliament next week. Let's see, and for markets, bitter fruit indeed, as Beijing fears it's been forced by Washington to take unpalatable measures in their trade standoff. Well, global investors are having to swallow the consequences of a re-escalation of U.S.-China trade war. With that, now looks like it will rumble at least until President Trump's and Xi's meeting to face-to-face at G20 late next month. After Washington more than doubled tariffs on $200 billion of Chinese goods to 25% on Friday, the White House claimed China reneged on earlier comments and refused to pass laws supporting these measures on agreed enforcement procedures. China's state media claims the country is being asked to eat bitter fruit, and markets are now based for its retaliation for Friday's tariff hikes. Trump's retaliation is reiterated his view that China broke the deal, and the United States is right with want to be with Beijing. After a fleeting bounce on Friday, Shanghai stocks and Wall Street futures dropped more than 1% first thing on Monday. 10-year yields nudged lower, but held just above 2.44 on the flights to safety, offset by jitters how tariff hikes would affect U.S. consumer inflation and Chinese demand for government bonds. The yield curve between 3 months and 10 years is flattened to as low as 2 basis points, a whisker from another inversion that caused some consternation in March. European stocks opened slightly lower. And on to FX. The yen firms, but won, and Aussie slip as China trade war heats up. Safe haven yen from slightly in Chinese yuan and Australian dollars slipped on Monday as the latest escalation in trade between the U.S. and China. The world's two biggest economies appeared at a deadlock over trade negotiations on Sunday as Washington demanded promise of concrete changes to Chinese law and Beijing said it would not swallow any bitter fruit. Trade conflict has escalated, raising tariffs on $200 billion. The conflict between U.S. and China trade war is intensifying as the yen is gaining, while the Chinese yuan and Australian dollar are retreating. As a result, said Masafumi Yamamoto, the overall reaction by the currencies has been limited. However, there's also some factors to support hopes for an eventual settlement, such as the possibility of two countries' presidents meeting at the G20. President Trump and Chinese Xi Jinping are likely to meet during the G20 summit in Japan at the end of June and discuss trade. Dollar yen's range has definitely shifted lower, but it's difficult to see how the dollar falls back towards its lows probed against the yen at the start of the year, given how relatively firm recent U.S. economic data has been, said Koji Fukaya, referring to the greenback's brief flash crash below 105. It will be a matter of trying to spot how the trade conflict comes to further affect economies such as that of the United States. The Australian dollar shed 0.3 to 69.76, and we take the currency already burdened by a double shift by the RBA to its lowest since early January. With that, we can go on and move in to the analysis. And if you go onto the site for the basic technical, that's where I have my analysis. You can see those here. And let's go move onto the euro. So for me, what I do is I put these little highlights there. They kind of keep me in check as to where things are at. So looking at the euro, I said the euro continues on a steady track to 12.62. A daily close above will open a challenge of 13.72 with immediate resistance at 13.24. Support is 11.90 with a daily close below 11.68, setting the market to new lows. So once again, the euro continues on a steady track to 12.62. A daily close above would open a challenge of 13.72. And we'll take a look at the euro on the daily. So we're still on track to get here to this 1262. I mean, we're still pushing along. We've moved a little bit higher. There's the risk for the dollar to slide back. Now, I don't think the dollar's going to come all apart, but I think that a good chance that we can still slide back, which I'm surprised the euro hasn't even tried to push a little bit higher, but probably a little bit of mixed bag in it. so far, but once we get to the U.S. session with Pike and some back and forthing, we may see the dollar start to go and slip at that point. So really the key resistance is going to be right here. It's heading towards this 1262, and we'll keep that as our resistance here, right there. And right there, showing here that support's going to come in right there at 1190. 1190. So let's go on and swing back in here. Taking a look here with the euro, you can see we've broken out of this trend line here, and everything points towards a move higher, although we've been still relatively quiet. I think as if the dollar starts to pare back, then we can start to get this push in the euro, get us up here to that 1262. Let's go and move into the cable. Okay, with the cable, it says 2 weeks ago there was a failed breakdown below the 2980 pivot. Now the corresponding rally has given up gains, falling back to the pivot. Initial resistance to start the week is 30.49 with support at 29.44. The pair has no defined momentum. Pair is simply reacting to Brexit news. So one moment. So what we're referring to is a couple of weeks ago, we got this, actually even a close on a Friday below this pivot, which opened the door for us to move much slower. And then we turn around in the following week, we turn in a blast through here and we look like we're going to Venus. And then we turn around and give everything all back. And now we're just kind of dithering around this pivot, that 2980. So as I mentioned, resistance is going to be right here in this 30.49 for resistance, with support here at 29.44. So we're keeping it pretty tight in here, but coming in right there. Right there, 29.44. We'll see if they break that pivot. But like I said, after it's been, like I said, there's just no momentum. As I said, now they may be trying to force her out at this point. But like I said, it was interesting to see, as we broke it, it pointed to a much slower. We turn around and rebound, and then we get this ridiculous news, and everything's all hunky dory, and then we turn around and give it all the way back, and so we're just floundering here near this pivot. And moving on to the Aussie dollar. Okay, moving into the Aussie dollar. Obviously, we're seeing the pressure. I still have this 69.55, the 61%, but on the Aussie dollar, it says the Aussie dollar has been trading on either side of 70 cents, awaiting U.S.-China developments. A rally in equities on Friday was not enough to keep the pair's head above 70 cents. 69 cents should come quickly in light of China's walk from further negotiations. Resistance is 70.70. So here's my thinking right here is like, I think most everybody is thinking that we're going to go on and come under some trouble in here. And I think we're going to end up taking out the 69.55 cents. And I think when we do take that out, I think it's a quick flush down here to 69 cents. I'm not going to go with this for being support because my guess is we'll probably just blast right through that. So to say this is support implies that, oh, well, they're going to bounce for that. Now, we may kind of hang around here, but I think we'll ultimately end up pulling back down. So we're going to go with just 69 cents, thinking that if we break that, it's going to be a quick fly down to 69 cents. I think we had 69.40 below. There might be a little bit of a touch down here when we take that out. But still, once again, when we hit those stops past 69.55, it might come fast and furious. So let's go with 69 even. And resistance on the daily would be 70.70. And this need to just change that to a range. So right up in here. So we'd have to really turn things around. I don't want to say it's 70.27. That's a little bit too low because you could either hit some short covering, jump right back up above this, come up here to about 70.60, and then turn around and slide right back down. So the real resistance up in here would be 70.70. And of course, like I said, the 69.55, 61% of that whole big flash crash movement. With that, let's go and move into the Kiwi. There we go. Q is expected to suffer from the U.S.-China failed talks on initial blush. A move to new lows as is in the offing with 69.46 key for a daily close defense. Upside resistance is 66.42. So once again, that we push as low as potentially as low as down here to 64.96, and that's going to be key on a daily for that to hold. And with resistance being at 69.42, we'll take a look at that. But let's pop in those numbers. So if we hit these stops here and we're still holding up relatively well, then I think that we'll blow through here. But I think the key is going to be, and we could even dip down here, is going to be a daily close above the 64.96. We could actually, I think we could go through here, but then by the end of the day, try and make a stand here. And that's what I think they'll do. Whether or not they're capable of making that stand here, I don't know, but it'll be 64.96 for the key on the downside. With resistance at 66.42, right there. Next up is the dollar CAD, and the dollar CAD spent last week unable to secure a move above 135. Friday's employment report was stellar, opening the door for a potential move to the trend line at 133, confluencing with level support 32.95, and resistance is 34.74. So let's go with the resistance for right now. Look, all last week they had the chance to get above this 135, and they have not been able to get above it. And they've had everything going for it. Now, finally, this market got pulled back right to the pip down to 33.82. This level on this great Canadian employment numbers. But the thing is that they could have jumped in. I think that although people are saying, well, the Canadian currency is going to be impacted by China. Well, maybe it will, maybe it won't. But you know what? We've been singing that song for a long, long time. It's going to be impacted by China. It's going to be impacted by China. And if it was going to be impacted by China, then why the heck is this thing trading at 137? You see what I'm saying? I don't see anything that's changed to the positive. My concern is that I expect the dollar to go and pare back. So we'll see what happens. This thing has been resilient as all get out. But that being said, to me, it feels like as if you're stuck in neutral and you're just gunning the engine thinking it's going to move higher. It's going to be impacted by China. It's going to be impacted by China. Well, it hasn't been impacted by China. That's what I'm saying is we're still waiting, just like we're waiting for Trump's the talk about, we're going to get those China talks in. They're just around the corner. I received a beautiful letter from the Chinese premier, blah, 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 and we're still waiting for succession on those talks. And that's what I'm saying is, to me, it had a lot of opportunities to get above 135 all last week, and it just simply hasn't been able to go in and do it. So my guess is, I'm not even a guess, but I'm just saying is, with that strong, I think it's a mixed bag when we come out of this China business. I think that the knee-jerk reaction is for the Aussie to fall, but we'll see how much it's impacted. But in a strange way, we might end up seeing the Aussie not maybe materially affected once we break these lows on the Aussie, as much as some people would think. Because remember, the thought was the Aussie's going to get beat up when they get a U.S.-China deal, because the Aussie's going to suffer. Okay, so how's the Aussie now suffering again? Well, then if we don't get a deal, well, it still has to suffer. Well, I don't know. I'm saying is, after the knee-jerk reaction, maybe we won't see a lot of follow-through when we break lower. The only thing is going to be for the Aussie is that that the RBA is dovish, and that we'll probably see some initial moves. But I'm thinking that even if the Aussie does break, we'll probably go through 69 cents. But I wouldn't be so surprised or so sure that it's going to go and fall a whole chunk of change. We shall see. But anyway, that being said, because it's a commodity currency, well, here we are with the Canadian currency. Now, how the heck are you going to beat this thing up when it had the best employment number since who knows when? You see what I'm saying? So, like I said, to me, I think at best this thing is going to be in neutral. Just sitting there gunning the motor, talking about how bad things are going to get, and we're just gunning the engine, but we're not going anywhere because we have it in neutral. So my thinking is that with the dollar susceptible to a pullback, and we shall see, what I'm saying is that we'd end up making a move down here to potentially to this 133 if the dollar starts to put on its own pullback, and I think that will open the door for us to pull us lower. So support right now is going to be this. You have to go with this 33.82 right now. But that's my thoughts on this. Is we'll see what happens. But I just if it was just the Canadian currency all by itself, then maybe so. but I'm thinking that the dollar is going to go on and have a little bit of a tough time too over the course of this week also, which will allow this market to come down. Now, we may come down, take out lows. We may make it down here to 33, I don't know, like 33.50, and then maybe the market doesn't get any more traction to the downside, and then we start moving higher. But it's pretty tough for me to swallow how this thing makes a move above 35, 35 even, when it had all the opportunity to do it last week and even the prior week, and still wasn't able to go and do it. So anyway, let's go on and move on. We've got the bias chart support and resistance there for the dollar CAD. Let's go move into the dollar peso. Okay, the peso is broken above the downtrend line with emerging exponential moving averages generating a buy. But Friday gave up the gains as risk aversion fell short. Support is 1904 with daily resistance at 1923.6. Now let's see, we just made a run up here, 19, just barely nicked 24, 1923.6. A daily close above opens the door for a challenge of 1957 with immediate move to 1935.6. So let's take a look at the peso. There we are. We actually had a nice run, and then we turned around and gave it all back on Friday, a good chunk of it, and here we are coming back up, and we've got our resistance at 1923.6. Looks like we just nicked it at 24.40. So we just barely got above the 1924. We got 1923.6, and you can see here the buy signals on the exponential. We've broken above the trend line, so the thing looks like we can move higher. And if we do get that close above 1923.6 right there, then we're looking for a move up here to 1957. So we'll go with 1923.6. We had a resistance at 1904, but that's when we finished those lows there. Let's see where support now would come in with the peso. Well, I don't think we're going to come all the way back down to 1915. Let's go right. See if we get a bounce in the speeds. I don't see that, but 1914.5. 1914.5. Obviously, with risk aversion, that this thing has a chance to go and move a whole heck of a lot higher. And with that, we'll go on and move into the dollar yen. The dollar yen has faded near to the pivot of 927. The upside resistance is 1050 with exponential moving averages and a solid sell mode with support at the pivot, which is 927. Beyond is 876. Well, pretty hard to see if this thing would make it all the way back up to 1050. So let's take a look at something a little bit closer in the ballpark. There's a pivot at 927. So we're going to have to move into the 2 hour to see if we can find a little bit closer resistance. Well, we suggest it would come in right there at 110. 110. Let's actually go up size right there. 1094. And for right now, support's going to be right here at the pivot, 927. It's awfully close to that pivot. I think we should be able to blast past that. Let's go with 907. 907. The pivot is huge, and they could reclaim the pivot, and close just a back above it on a 2 hour, or daily. But the key is going to be once you hit those stops, it's going to be unloading it. So 907. So it says the dollar index spent last week in pullback mode with support found at 97.20. Concern is a breakdown in U.S.-China talks has opened the door for a future Fed cut, exposing the dollar to vulnerability. Support is 96.81 with resistance at 97.68. So that's the talk, and it's already had been gathering steam on even on Friday was, hey, look, if the Fed goes in, if these break down, the dollar's susceptible. They already started pricing in percentage wise a Fed cut. Whether that happens or not, but I'm just saying that's how the market's already priced it in. And the dollar, although I don't think it's going to fall out of bed because the economy is still very good. But that being said, it doesn't preclude it from an okay correction, and that may bring us down here closer towards this, maybe in the 40s or something. But for right now, support's going to be 96.81, and resistance. We've got that 97.68. It might even have a tough time trying to go beyond. Let's say that might be a tall order to say. Let's just go with 97.61 for resistance. Let's say risk aversion, it caused a bid into the dollar, so let's go with 61. There we go, right here. I think we have a good chance to move back down towards this 96.81. So now let's go on and move in to the Kiwi yen. Now we're still holding just above here, the 72 cents here. Let's take a look here on the 2-hour chart. That's where we found that resist support right there at that 71.82. Hang on. The yen strength in here is going to get a little bit ugly, but key's going to be it's going to be 71.45. Resistance right there, 72.61. Next up is going to be the euro yen. So the euro yen formed a hammer bottom on Thursday, and let's move to the daily. The euro yen formed a hammer bottom on Thursday with follow through on Friday. Okay, initial daily support is 2308 with resistance at 24 even. Confluence with the downtrend line. Well, like I said, we did form that. We came in right about the 127%, but boy, this thing is under some pressure right now, and we could certainly see this market weaken if we see the yen hit those stops, across the board. If we see equities continue to weaken, I think we would now. We'll see how quickly that develops. Will it be mid-US session? Could it be late US session? And at that point, at least for now, we'll move this down here for support at 22.75 for now. And resistance is going to come up here, right there, 23.81 on the 2 hour, right there. 24 is key on the daily, but I'm saying is right now, when we do this analysis, I do it on Sunday before the market's going to open. So we have to figure out where are we going to be at that time. And, but for right now, here's the reality. We're lower, so certainly got to have to move lower the resistance as well as support. Moving on to the Euro odd. Euro odd has been in solid buy mode with exponential moving average with a mild pause at 61.14, with sight set for 62 even, confluence with 62.23, which is the 61% of this move. Support is 59.93, followed by 59.55. So let's see where we stand right now here. Now, taking a look here at this Euro odd. Had a pretty good straight up move. We've ran into a little bit of resistance, 61.14. Like I said, I don't think that the Aussie is going to totally come apart. Like I said, come off by like 3 full cents, or delve into we'll see what happens because we do have a dovish RBA, but and I think initial knee-jerk reaction is to knock that Aussie down. But that being said, we'll probably fly through 69 cents, but I don't know about all the 60, 60, 65 jazz. I just, like I said, we'll see how this plays out, but you can't have it both ways. You simply can't. You can't say that the Aussie's going to go on and have a tough time once we get a China deal, and then there's no China deal. They're still going to have a tough time. And so my thinking is they're going to be impacted, and a knee-jerk reaction is going to be selling the Aussie, but I don't know that it's all going to come all unglued then. But we shall see. So I mean, do we break to new lows? I would think so, but how much further beyond? I think that's kind of questionable. So once again, can we break up to here towards this 62 cents? Yeah, I think so. And then we'll see what happens after that. Support then is going to come in. We're trading at 69. We want to look a little bit closer here on the 2 hour chart. Hold on. Support's going to come in at 60.38 right now. And that's giving it some decent leeway there. It looks like everything points to 62 cents, but we'll go with right there, this little neck area here, 61.81, 61.81. Moving on to the Euro Kiwi. The Euro Kiwi is pushing for 72.21 as it will eclipse prior 2019 highs. Current resistance is 71.31. Confluence was 71.14, which is a 50%. Support is 69.42. So take a look here on the Kiwi. I think we have a chance to really push much higher here towards the 72.21. Well, we got a little bit of resistance in here. 71.31 comes on the tap right now. So we're going to go with 71.31. I think we can go beyond that and eclipse these highs, but I think this is going to be some resistance. The market may have a little bit of tough time. I think they'll go beyond these highs eventually in time if the year starts to work higher. But on first blush for today, we're going to go with 71.31. And that's, once again, a breakdown with the Kiwi and the Aussie, if we get that. So 71.31. Support coming in looks like 70.08, but let's take a look on the 2 hour. Yep, 70.08. So taking a look here at the Aussie yen. The Aussie yen is poised for a further challenge of lows. Pair's immediate likely target is 75.31. Confluence was 75.66. The 50% of the entire move. Resistance is 77.54. Now here's another one. We're under some pressure. How much further can this move at this point? At this point, it's a pretty tall order to jump all the way back up here to 77 cents. Doesn't look like there'd be anything on the offing. If we start to come apart here, then I think we'll make a move down here. But that's a long ways off. Let's just start right now with this 75.66 being the 50%. So go with 76.93 for resistance right now. Moving to the guppy. Sterling Yen is poised to test the zone of 41.23/82, confluence with 41.96 at 38%. Resistance is 43.39. Now we're looking at the daily, but like I said, we're starting out the week already with under pressure. We're looking here potentially for this move to come all the way down to this 41.23, and we'll take a look at that here on the daily. Right here into this zone here. We're going to go with this for support here at the 41.82. On 41.83. We'll go 43.20 for resistance. And let's move into the starting odd. Well, Sterling's having its own tough time. We'll move this just a little bit higher right here. It's still a long ways away. And remember that 87.12 was a huge daily on the daily. So let's go with that 87.12 on the resistance. We've got it already marked. And support. I don't see that coming about, but support 85.68. And there's the bias chart for today. I'll get that posted. And thanks for joining us here on the European crossover webinar.